before we talk about, by far and away, the sexiest issue of the day, regulation. Now, typically at conferences worldwide, this is the panel where you go to sleep. Even though we have extraordinarily engaging guests, the topic itself is typically something left for the lawyers, when the business people have left the room. But a funny thing just happened. And right now you see why regulation, compliance, and policy is perhaps the single most important aspect of our industry today. The topic that we need to talk about the most and debate internally within the industry before we can actually affect change globally. So joining me, as I mentioned, are these three experts with different backgrounds. So I'm going to give each an opportunity to introduce themselves before we delve straight into a series of topics. So, Oliver, let's start with you.
Thanks, David. Oh, that's very loud. I am one of those boring lawyers, I'm afraid. So I would have been in this panel one way or the other. So before becoming CEO of Bittrex Global, I spent over a decade doing financial regulatory advisory work at a global law firm. Joined Bittrex Global a year ago, which in crypto terms is about a decade, and has taken over as CEO earlier this year. And it's certainly an interesting time to have done that and an interesting time to appear on this panel, so it's a real pleasure.
Excellent. Isabella.
Thank you, David. I'm a boring policy person. So I'm a senior policy advisor at TRM Labs, which is a blockchain intelligence company helping crypto firms and financial institutions trace and disrupt, hopefully, financial crime and fraud on the blockchains. Prior to that, I was at the Center for Financial Crime and Security Studies, looking at economic crime policy, emerging technologies, and financial inclusion.
Excellent. Laeeq.
My name is Laeeq Shabbir, and the voice is pretty good, thankfully. So my name is Laeeq Shabbir. I'm a director in EY. So I lead the assurance practice when it comes to anything on blockchain and digital assets. By background, I'm an auditor, not a lawyer, and experts in your respective area. But yes, in the traditional space, but one of the first people to be joining the blockchain team back in quite a few years back. So happy to be here and be part of the panel.
Excellent. And I'm David Wachsman, the founder and CEO of a company also called Wachsman, and we're the largest communication and strategy company in crypto. So let's go straight into the not news, and then it'll all dovetail in a little bit. We have recently seen EMEIA come out. Can someone here, Isabella, explain a little bit about what EMEIA is?
Sure. So EMEIA, the market in crypto assets regulation, is the EU's attempt at creating a framework for digital assets. It does that in a very rigorous and robust way, I would say. So it creates three categories of assets. So we have digital assets, which is your sort of go-to cryptocurrency. We have asset reference tokens, which are kind of stable coins, and then e-money tokens, which are kind of CBDCs. There is layers to those definitions. There's also categories within categories, so you have the standards of those, and then the significant versions of all of those when you're trading in certain volumes or you have certain numbers of customers. What it asks of those categories is that everyone has to license under EMEIA. You have to produce things like a white paper that explains exactly what you're doing, your risks. Interestingly, also your environmental impacts. It lays out a whole swathe of different reporting requirements. And also, if you are licensed under EMEIA, you are an obliged entity under the anti-money laundering regulation. So all of the EU's financial crime, on money laundering and terrorist financing, now also applies to you. So again, that's licensing, customer due diligence, reporting, lots of stuff.
And so ostensibly, this is for the third largest economic bloc in the world, in the EU. This creates a pretty comprehensive framework for at least a large swath, as you mentioned, of digital assets, but not all.
No.
So NFTs and most of DeFi don't fall under EMEIA. And I guess until about 2 days ago, people were concerned that those were the biggest offenders in terms of the most risky types of assets or asset classes within the industry. You're EY, which is, of course, in addition to being a top consulting firm, and you work hand in hand with large Fortune 50, Fortune 500 companies all the time, you're also, different divisions of you are kind of also involved in auditing organizations.
Yes.
You're also involved in on the compliance side and advising companies on how to do things properly and right. one of the issues has been historically with comprehensive regulation, and policy, I should say, is that it's very hard to comply even if you want to. So let me ask you this, as someone who's had to advise companies. Can organizations actually comply with MiCA?
So it's a bit of a journey. You have to appreciate the fact that, look, if you want to make sure that you can have compliance at the forefront of your organization, I think the first and the most important thing is the mindset, right? What we always advocate for is getting things right the first time, getting the boring stuff, as often people say, risk, governance. I'm conscious, blockchain.com, we're also here talking about managing risks. So I think the most important thing is, can you comply from a MiCA perspective? Yes, you can, but you have to have the right mindset towards moving in that direction. And unfortunately, we've seen that time and time again, that things don't go right whenever you're looking things under the hood. So when it comes to auditing, compliance, and various functions that we have looked at, I think from a quality perspective, we do often see that, there are often gaps. So whilst innovation is great, we should be focusing on innovation and moving forward in the right direction, but, you have to have that in your mindset that we need to do the right thing for the customers, protect the consumers, investors, and the ecosystem. So it's very important. I think these are very pertinent issues that we've been seeing in the market.
Well, Oliver, you're running an exchange that happens to be based in Europe. So can you tell us about how your organization is handling MiCA, and I'm going to call it pan-European compliance?
Sure. So your question, Laeeq, is a really good one. Can you comply with MiCA? We're doing it. We've been doing it for years because MiCA is just the EU catching up with what individual member states have actually been doing since 2018. So Bittrex Global is regulated in Liechtenstein, and in 2018-19, they brought into effect the Blockchain Act, the TBTG. And MiCA is based, in large part and sometimes explicitly, on the TBTG. So everything that was explained by Isabella on MiCA, we've been doing that for years, and we know what it takes. It does take a lot of effort. It's difficult. It's a real pain sometimes, but it imposes incredibly high standards on us.
Well, let me ask you a question. Is it possible that has created, in some sense, a regulatory moat that prevents new players from entering the space?
It should prevent new bad players from entering the space, yeah, but it should create a path for new good players, for people that take regulation and compliance seriously, to actually be able to go out to people and say, these are the standards that we are complying with, you know what you're getting, right? And we do this all the time. The idea that there could be a bank that says it's regulated, but you don't know what standards it applies, well, we wouldn't do it. And you would basically consider that an unregulated bank. Well, you wouldn't put your money in an unregulated bank.
Of course not.
Why would you put your money on an unregulated exchange?
And yet people do all the time.
Because we haven't done a good enough job of explaining the importance of regulation, the standards that apply to that regulation, where you're doing it, how you're doing it, and most importantly of all, why that makes markets safer.
Okay, so is the UK falling behind? Because MiCA we're talking about is in the EU.
I fear that it risks falling behind. Now, MiCA, we say, is here. Actually, it's not here, but it won't even be implemented until the back end of next year, maybe pushing into 2024.
Well, in regulatory terms, worth noting to everyone, in crypto, a year's a long time, but not when it comes to policy.
Oh, that's definitely true. But the UK now has the opportunity to really galvanize itself. When Rishi Sunak was Chancellor, he said some very good things about crypto and really wanted to make the UK a crypto hub. But then at the same time, the FCA banned crypto derivatives for retail in the UK. Yeah. We're not naive here. We realize that people are going to do these things. There's going to be workarounds for bad actors. I would much rather see the UK say, okay, how do we get to grips with regulation, do it properly? And regulating doesn't mean banning. Regulating means creating a path whereby people know what they're buying, know what they're getting themselves into, and make that decision in a fair way. That's what we do under the TBTG in Liechtenstein. That's what we do under DABA in Bermuda. And we think our customers really benefit from that, whether that's institutions being able to offer products that are direct comparators to the TradFi products, or whether that's retail customers who are just interested in getting into crypto or want to get more into crypto, perhaps less so in the last couple of days, but there's going to be the interest there. And people are going to be saying, okay, how do I do this in a way that's predictable? How do I do this in a way that I know that when I buy something, I'm going to get that thing?
Okay, so to that end, I think we've just heard, and Peter Smith described it extraordinarily articulately. The regulated entity for FTX seems like it's operating well. One-to-one asset-backed, for example, it's doing well. whereas the non-regulated entity is not. Have we just seen a seismic shift within the industry, Isabella? Have we seen that organizations that comply with regulation aren't just more popular with government, but are going to be much more popular with consumers, investors, and traders?
Very good question. And just to come back to a previous point on MiCA and will that stop innovation? And to answer this question, one thing that it does do is it brings in the prohibition on market abuse and market manipulation. And as a consumer, I think you're much happier to enter that market when those prohibitions are in place. And you do know in the EU that is likely to be enforced. So I think what we will see is, especially as the UK establishes its framework, which I also would say, I personally don't think the UK is falling behind. There is a lot more activity happening in the UK than I think sometimes we give the UK credit for. So the Financial Services and Markets Bill should be done this year. That will give the FCA the ability to create a similar regulatory framework that we have in the EU, and they will be able to do that much faster than if they went down a similar route as the EU. But we also have things like, the Economic Crime Bill coming through, which makes it easier for law enforcement to seize crypto assets. We have a Treasury Select Committee inquiry into crypto, which will directly impact and influence what happens next year in the regulatory framework development. We have a crypto APPG inquiry. There's lots going on, so I don't think we're falling behind. We're just having a considered thought. Events like this week inevitably will influence.
I was going to say, this is going to either resuscitate the conversation or bring it to a totally new level. I mean, how could it not? I guess we're kind of forced into talking about FTX and Binance. So let me ask our friend from EY here. What is this going to mean for regulation worldwide? What's the net effect going to be, as far as you can tell at this point?
I think so. If you think regulation and you think of quality and if you think of risk, you have to try to bring that all together. So fair enough, you have the regulated entity, but you have to also appreciate what's underneath that, i.e. what's under the hood, right? And if you've done the right thing from the very beginning, if you've got the right controls, governance in place, you're really going to survive. And I think that's what the regulator is even looking for. Because fair enough, you go through I'm conscious most of you, if you've gone through a process with the FCA, it could perhaps be a bit challenging. It can be, it's a long process. But they do go out of their way to appreciate what you're really doing as a business. Are you going to be resilient? What if things fall down? How are you going to survive? Insolvency, many questions. I think those are all the important things that matter from a regulation perspective, because what are they focused on? Protecting consumers, investors, and also making sure you're doing the right thing from an ecosystem perspective. So I think that's what matters. It is going to go to the next level, yes, but I think we've always been saying, and I think I was last week at another event, and even Web3 Summit, where you basically said, bad actors are going to struggle, and it's going to flush things out. But I mean, fair enough, it's bad for the ecosystem as a whole, because everyone's here working really hard to make sure we can bring that element of trust in this ecosystem, or for that matter, blockchain or digital assets.
Let me ask a follow-up question.
Yep.
In CZ's note, one of the notes he posted to Twitter yesterday, he mentioned that one of the bits of fallout from this was going to be harder in the future for regulated entities or would-be regulated entities to receive licenses in jurisdictions worldwide. Do you think that's true?
I think you have to strike a balance. Right? If the view is the fact that you're not going to get licensed, I mean, fair enough, but the question is why, right? Are you doing something wrong, or you not got your ecosystem or your organization in order, right? If you don't, it's going to be hard to get a license.
No doubt. But I think the fear is that if I'm a regulator, I might, in order to look good or look like I'm not doing anything risky, slow down everything right now.
No. So I think you have to appreciate that the regulations are based on principles, or they're based on whatever they prescribe, either rules or they'll say outcome-based. I think the important thing to bear in mind is that the hurdle will become higher, but that doesn't preclude people from saying, I'm not going to get the license. So you'll have to work hard for it, and you'll have to convince. So for example, if things fell apart from a liquidity perspective or proof of reserve point of view, they'll ask the question, do you have something in order? Right? And then you'll have to go the extra mile, as to Oliver's point, really doing the boring stuff, or so to say, the risk governance, etc. to make sure that you can give confidence to the regulator that, you're at it. So,
And indeed, we've seen, interestingly enough, in just the last couple days, a number of digital asset exchanges posting proofs of reserves, some on-chain and some using third-party auditors, but it seems like a step in the right direction. Isabella, I do want to talk a little bit about financial crimes. Not only is it your specific expertise, but it's, of course, of great interest. Would you be able to give the audience here a bit of a snapshot of the scale of financial crimes in this industry? How much money has been lost to hacks, for example, in recent months?
It's been a year for financial crime and crypto. So, I mean, I don't love putting a definitive figure on the amount of illicit finance that goes through crypto.
We won't quote you on this.
We only know what we know, but there's kind of like a consensus amongst the industry that we're looking at around 2% of the whole industry volume is linked to illicit finance. What is the breakdown of that illicit finance? Well, this year you cannot get away from the DeFi hack. We're looking at about $3.1 billion taken in hacks this year. 95% of that is in the DeFi ecosystem. In fact, I think between January and August, there was a DeFi hack every 3.5 days. So
these were lending protocols, bridges, et cetera.
So on the whole, what we see is decentralized exchanges and bridges. Bridges are less frequent in terms of hacks, but they are so much bigger when they do occur.
Because there's like this quadratic risk.
Exactly. And why are they attacked? It's the low-hanging fruit, right? This is all relatively new pieces of software, and it's easier to exploit. Who's going after them? It's a whole range of actors. Of course, you've got your sort of organized hacking groups. But a particularly prolific actor in the space in DeFi hacks is North Korea. So what we see, it's about $1 billion this year. Well, they put $1 billion through Tornado Cash, which you called the sanctions, which is another topic we can talk about. Right? But in addition to DeFi hacks, I mean, they get a lot of the press, but fraud and scams are your next biggest category. And at TRM, we just released a bunch of research just yesterday looking at these what we call mega frauds. So these are frauds that in 2022 alone have taken $100 million in deposits. 11 of these make up 74% of the $4 billion total that has gone into these investment scams. So think OneCoin, the missing crypto queen. It's not over. It's continuing. They're happening all the time. And from like a wider risk perspective, this is consumers' retail funds that are going to disappear one day in these frauds. So the big focus for us in illicit finance, DeFi hacks, investments, frauds, scams involving NFTs, but you also have your more traditional money laundering from darknet marketplaces, a sprinkling of terrorist financing, and sanctions evasion.
So, I mean, look, that's a lot of bad words there. But if I may re-encapsulate that, you mentioned about 2% of, I'm going to call it assets, digital assets this past year, somehow you believe have been involved in financial crimes. That sounds both like a lot, at the same time, like 98% has nothing to do with financial crime, meaning this industry is indeed robust and has real utility already and isn't just theoretical. So to that end, let me ask you this. How can we whittle away at that 2%? What can we do?
So I think you have to appreciate standards. I think there are quite a number of existing standards that do exist for the market. Now we'll have to, you know how from a crypto industry perspective, you said innovatively how we can do things differently, but equally I think we as and the industry needs to appreciate what already exists in the market, like SOC, ISO reports. Use that because those are standards that can easily be converted from your own use case and use them and apply them to make sure that you can cover yourself from hacks and so many other perspectives. So again, goes back to the prominent point of risk controls, governance, making sure your ecosystem is tight. Same thing from a smart contract point of view. Yes, you can do audits of them, but how robust is the audit? I mean, that question really pops up as well for us. So existing ecosystem standards that do exist, try to merge them and do that. And you know what? You'll make sure you're quite robust and tight.
Well, it certainly does seem like not every smart contract audit is made equal.
Yep, agreed.
There's been a lot on the RECT database, that's REKT, that one should look up, and you can see what I mean. So Oliver, you've been leading a regulated exchange, a centralized exchange, that custodies assets. How are you putting down or creating measures to further, I guess, in the entire ecosystem, prevent financial crimes?
So I think it's important to distinguish. There's two types of financial crime that we need to protect against at Bittrex Global, and we have an important role to play here. The first is protecting our customers from hacks and from other bad actors within the industry. And security for us at Bittrex Global is everything. Our founders, when they created the original Bittrex, they did so coming from a security engineering background and wanted to get involved in crypto. This is way back, 2012, 2013, like real OG crypto stuff. And they looked out there and they were like, well, everything that's out there right now kind of sucks from a security perspective. Let's create our own thing. So security is in our blueprint, it's in everything we do from the very beginning. So that's one aspect of it, and that's protecting the platform and protecting the users of the platform from bad third-party actors. But the second bit is making sure that our platform isn't used by third-party actors to perpetuate criminal activity. And so what that means is having real, genuine KYC requirements, enhanced due diligence when we identify additional risks, filing suspicious activity reports, suspicious transaction reports, working with the regulators to clamp down where we see suspicious activity so that we can actually take those people and drag them by the scruff of their necks.
Let me ask you this. Does that happen more frequently than we in the public might know?
Oh, absolutely it does. And what the market as a whole doesn't see, and what perhaps the whole industry should be better at doing, is the effort that is going on behind the scenes, and what compliance, when we say, oh, well, we're compliant, what that really means. We are applying the same standards as banks have to do when it comes to AML and KYC. Right? We're subject to precisely the same laws, implemented by precisely the same regulators, to precisely the same standards. So this is not a soft touch for people, provided that you're talking about those platforms that take it seriously and are regulated. So we voluntarily put ourselves in a position where we had to comply with those standards by getting regulated in Liechtenstein, by getting regulated in Bermuda. And these are jurisdictions that are used to regulating financial services, right? Liechtenstein in particular for private wealth and banking, Bermuda with a very sophisticated insurance industry. These are industries, these are therefore regulators that are used to doing this stuff. And so when we said, well, apply these standards to us as well, please, they said, sure, it's going to be really difficult. And we were like, yeah, sign us up, because that's what everyone should be doing.
Interesting. I wonder if every exchange is going to go and take the onerous path forwards. But perhaps it is the right one and might be more attractive, as I was saying earlier, to kind of a commercial basis as well. And I think that might be kind of the hallmark of the latter half of 22. So let's change topics a little bit. At TRM, one thing I know from experience, even working with some of our clients, is that when there is a hack, one of the very first things that happens is you look to trace the funds. Eventually, it might turn into something criminal. Presumably, it was in the first place, not some white hat hacker. But that's, of course, one of the things that TRM is famous for, of course, is its forensics. To what extent are your suite of products at TRM able to help regulators enforce global rules?
Sure. Well, and kind of also to what Oliver was saying just there, like, he can go to a regulator and say, please regulate me. And you can also then say, I can also do a way better job at following the rules than banks do, because I have so much more visibility of what goes on in this ecosystem.
Can you explain that a little bit to the audience, please?
Sure. So if I'm a bank, I can only see what my transactions are, what's coming to me. I don't see what happened to the transaction before it came to me.
It's a black box before it arrives to you.
Pretty much like the only traditional financial institution who has a really good view of what's going on are the MSBs, so like Western Union and MoneyGram. But if I'm like a traditional bank, I literally just see what's appeared at my front door and I go, okay, cool, well, it's coming from a person I know is fine, but who did it come from before that? I just don't know. But in blockchain, because it's so transparent, I can see exactly where every single transaction's come from, what that wallet address has been associated with. Someone said to me recently, it's like, imagine if you took I don't know if anyone in this room has cash on them. I find they probably don't. But if you took a hypothetical £10 note out of your pocket and you searched the serial number in a Google search engine, and you were able to see exactly at which pocket that £10 note had been in, all the pockets had ever been in. That's what we have in blockchain and analytics and intelligence. So we have a way more advanced ability to trace and track financial crime because we can really understand the networks and the movement of funds to an extent that just hasn't been possible in the past. Your question was, how can regulators use our tools? Well, also to your point earlier about licensing and why is this going to become more difficult? I think we see regulators around the world. We work with a number of regulators adopting blockchain analytics and intelligence tools to perform the compliance that they need on the people that they're licensing, so they can really have a deep level of understanding of the VASPs that are operating in their jurisdictions. How do we trace funds? Well, there's a whole range of different methods. But yeah, when an incident like a hack, for example, occurs, straight away we can look at the associated addresses, we can tag them, we can follow the funds as they move through different, what we call signatures, or more traditionally money laundering typologies, that they're using peeling chains or web flows to try and hide the origin of funds, and then we can work with law enforcement agencies to try and recover assets. So if it ends up...
It does happen from time to time, and certainly we've seen exchanges, for example, stopping wallets from receiving blacklisted funds, for example, because, of course, it's all on-chain. I've got to ask, though, does regulation have its limits? So one of the things that we talked about in our prep call was that it's possible that we shouldn't overregulate to such an extent that we're not actually solving the real problems here. And I must admit, some of the problems here, perhaps not what occurred at FTX, but some of what we talked about today really are cybersecurity issues. And of course, it's something EY consults on. Is that the bigger problem here?
I think there are multiple problems, and it's very difficult to appreciate how can you merge them all together to either say, is it regulation, or is it cybersecurity, or what is it? What we can do from a market point of view is learn from history, right? We've had the financial crisis, we've had hacks, we've had so many situations that have happened. So regulation is an aspect of it, but what we often say is your mindset. You want to make sure you're doing the right thing for the organization, shareholders, customers, and the ecosystem. And how can you do that? And when we start to break that down, regulation is one aspect of it. But equally, what do you have under the hood? How do you prove that level of assurance, and how can you give that level of assurance, be it using a third party or not, right? Self-regulation is also a big concept that people said that, you know what, we're just going to go bank-style regulation, and we're going to go really hard so that when it comes to the point where we need to be regulated, we'll basically say, we've been doing it all along, right? So I think you have to break it down into many facets of what do we really want to do, and it really starts from the top. If you get that right, you'll make sure that everything starts to make its way down, and you will do the right thing with the ecosystem that you need to build, be it regulation, financial crime, sanctions, IFPR reporting, Pillar 2 reporting, Basel reporting. There's so many of them, but you'll get into the hang of things and you'll do the right thing. But the main thing is start from the top, and if you get that right, it'll start trickling down. And you've got existing, like I said before, you've got the right standards that do exist in the market, and that has evolved for digital assets too. So if someone says, well, we don't have the right level of standards for ourselves, well, it has evolved, and professional bodies like EY and others contributed to that ecosystem as well, to say, you know what, we've got this ecosystem of SOC reporting, how will that apply to digital assets? And that report basically, I think, came out last year. What are the intricacies that we need to be conscious of so that the whole ecosystem in this market can understand what they need to do, right?
Well, one of the things that we crypto people are really looking forward to in 2023 is the implementation of what's called the travel rule.
Yes.
We talk a little bit about that today because some in the industry liken it to asking a one-armed man to clap. Is it even possible to implement? And beyond that, to a certain extent, is it compatible with the morals that made Bitcoin and crypto in the very first place? Isabella, I'm going to ask you that first.
Big question. Lots of questions in a question.
Why don't we
there.
start with mostly what is
the travel rule?
Let's start there. All right, with fundamentals.
Yeah, so the travel rule, it's existed in traditional finance for ages. It's something that would apply to a wire transfer, and you're basically asking the sender to send some information to the beneficiary on who's sending money, and the beneficiary sends some money back, some information back on who's receiving the money.
And more or less, what information is being shared between the sendee or the sender to the sendee?
Yeah,
the recipient?
Great question. No, it's name, bank, account number. It's more on the sender than more on the beneficiary than on the sender.
Yep.
And since 2018, so a little bit of history. As digital assets were becoming more and more popular, the Financial Action Task Force, which is the international standard setter on money laundering, terrorist financing, and proliferation finance, got very nervous about some of the risks that could, financial crime risks that could come from this asset class. And to try and mitigate those risks, they thought, well, we will change something called Recommendation 15, which brings in the wire transfer rules or travel rule for this asset class. And since 2018, people are supposed to implement it. Globally, there was a kind of agreed grace period because there was no technological solution to be able to send this type of information between vessels.
Right, like Bitcoin doesn't have a metadata layer to put who you are as an individual and who the recipient is, for example, and where they might be physically located.
Exactly.
So this, I think, is a really good example of how industry participants and regulators need to do a better job of working together, because the principles of the travel rule, I don't think anyone really objects to. We should be doing it, we should be finding a way to do it. But
Well, certainly some people do, but perhaps not the...
Well, but not us, right?
Right.
We are fine with the principle, which, as Isabella said, has been in the industry for a very long time. But we can only do what is physically possible to do, and it doesn't really help anyone to promulgate rules and then immediately say, oh no, but we didn't really mean those rules because the technology doesn't exist, so kind of don't worry about it, we won't enforce it yet. That doesn't help anyone. It creates uncertainty, it creates doubt. And we've been we have the Trust Network has been working away diligently trying to create the technology to do this stuff. But we need to be better at working with the regulators so that we don't get into this kind of bizarre situation. And I think historically, industry participants in crypto have been less willing to engage with the regulators, and they've seen them as the enemy that you wouldn't want to talk to. And what that creates is just bad regulation. That doesn't help anyone. We want good regulation, we want effective regulation, but it's the art of the possible. There's no point telling people, you said, trying to tell a one-handed man to clap. Given time and technology, and I don't want to milk the metaphor too much, but someone will develop a prosthetic and allow him to clap. But saying, do it right now, well, that doesn't help anyone. So we need to be better, I think, in the industry of going to the regulators saying, right, what do you want to achieve? What are the principles we need to get out there? Okay, here's how we can do that. Here's what you should be.
Well, Isabella was about to give us an update on kind of where things stand.
Well, no, I was about to say, now you have 9 other prosthetic hands to clap with, because there is 9 solutions out there at the moment that you could engage with. The problem, it's just really difficult, and it's new, and we need to iterate. A big issue is that these 9 solutions, they don't talk to each other. So if I'm Oliver, do I just use the Trust Network? Well, I can only use the Trust Network, which was built by Coinbase, if with other participants within the Trust framework. So you can speak from Bittrex to Coinbase, but you couldn't speak to someone else who's not in the network. So then you need another technology provider for that. And then all of a sudden you're like, wow, I have all these travel...
A lot of bureaucracy.
And it's quite difficult. So the interoperability issue is really at the fore right now. And then at that international policy setting level, the conversation is around this thing called the sunrise issue, that you have certain countries that, in the UK, it's in law, but it comes into force on the 1st of September 2023. In Europe, it is 2024, I think. And so what you end up with is countries at completely different stages of implementation. So again, what if I want to speak to, I'm a VASP, and I want to speak to another VASP in a country that has no travel rule.
VASP is Virtual Asset Service Provider.
Sorry, yeah.
Okay,
Acronym, like all over the, acronyms all over the shop. But yeah, so but you just end up like, what do I do if I want to do this transaction, but that jurisdiction doesn't have those rules implemented? And it's not just sending information, it's about doing due diligence on the VASP to ensure that they have the right information security to look after the information I'm sending. Even bigger problem, if I operate in the EU and I'm under GDPR, and I need to make sure that the person I'm sending the information to can comply with GDPR standards. So the Sunrise issue has meant that because we don't have global adoption at exactly the same time, there's lots of agility needed to make this work on a global level.
Sounds exceedingly complicated. That's what it sounds like. So I think having experts on board or available is in order for all the organizations within this space. It would be wrong to have a conversation about regulation without at least touching on my home country, the United States of America, where perhaps, and we've just had elections, for example, that was just on Tuesday, which may decide what the kind of the fate of Congress is, and to a large extent, Congress oversees the 3-letter or 4-letter agencies that seem to oversee crypto today. So I just love your perspective, Laeeq, of what's happening over in the U.S.
So I think it's regulations are happening, but is it as clear as one would say that, you know what, I don't have an element of uncertainty? It's unfortunately not there yet, but is it moving in the direction that we're all hoping for, that, you know, they're taking steps towards making sure there's clarity? Yes. Will we get there eventually? I'm sure we will. So I think our perspective is regulations is important for the industry. Is it all clear and certain? Unfortunately not. But do we think we're going to get there eventually? And I think from not just EY, there's so many of us, part of the ecosystem, that are trying to help the regulator and better understand how we can best do it. Right?
All right, so let's talk about that, because I think that's really important. How can we being the industry, best help regulators create great rules that they could then enforce? Oliver, what do you think?
Well, on the US side, one of the joys of working for Bittrex Global is that I don't need to engage with that discussion because we do not serve US clients at all. We engage with regulators around the world. But on the broader question, how do we engage with them? Well, this is so uncontroversial in TradFi that an exchange will be speaking to the regulator. There are models out there, right? The Liechtenstein model has been followed in the EU. The Bermuda model shows how that can work within a common law jurisdiction. It's not as big a challenge as everyone would have you believe, and there are people who, for their own purposes, say, oh, it's so difficult, throw their hands up in the air and say it can't be done. It can be done. It has been done, and it is being done. And so just as it's so uncontroversial for the London Stock Exchange, for example, to respond to a consultation paper, to work closely with legislators and regulators in the UK, why is it any more controversial for a crypto exchange or a crypto fund or any other kind of market participant to speak to the regulators and say, what do you want to achieve? Here's how we can do it. Here are some models that have been tried and tested and worked. You know, we've been doing it since 2018. This is not new stuff now, right? And people that say it can't be done, normally they're pushing their own agenda for why they don't want to have to do it.
Well, it also seems like the regulators today know a heck of a lot more about the technology than they did a few years ago when this was just complete Greek to them.
One thing I would say, though, and I completely agree with what Oliver has said, and I do think there are forums which are becoming much more matured for that regulator, or crucially also legislative voices, because if you're only engaging with regulators, you're a little bit late. You need to engage with the people who are writing the laws, not just the people enforcing the laws.
Definitely.
So people in Congress, people in Parliament, people in the Home Office and Treasury and Bank of England. But what I would definitely say is, if I am a regulator, my job is to find risk and to mitigate that risk. And we should all love regulators for that. It's a public service. What we need to do is help them see the opportunities and see all the great use cases and all the good that can come from this technology, because they are very good at finding the risk. But let's help them see all the good things as well. And I think that will lead to better regulation when you think, okay, there are these bad things, we can deal with them, but let's enable this amazing art of the possible, which will give us the economy of the future.
Well, I would like to end on that positive note. We have an opportunity to help regulators and policymakers worldwide understand the good in this tech. Well, with that, thank you, folks.
Thank you.